economy holds steady, but consumers grow more cautious. Today is the 20th August 2025. 今天是10月20号，然后中国3季度 GDP 的增速稳定，但消费者更加谨慎。Strong exports and continued investment in new factories offset faltering retail sales and a further erosion of China's housing market as growth in the Chinese economy held steady over the summer. During the third quarter of the year, from July through September, China's economy expanded 1.1% over the previous quarter, maintaining roughly the same pace as during the spring. China's National Bureau of Statistics said in a statement on Monday, if the pace continues, the economy will expand about 4.1% over the next 12 months. Over the past 4 years, a plunging house market has erased much of the savings of Chinese households, causing many to curtail spending and hurting retail sales. The central government has tried to offset this by providing subsidies from consumers to buy smartphones, electric cars, appliances, and other manufacturers' goods that are made mainly China. But most local governments, which bear part of the cost of the subsidies, are trimming their spending on these programs. Apartment prices are down by as much as 40% in many cities from their peak in the summers of 2021, dealing a critical blow to the country's developers and builders. The contraction in real estate and construction, which used to represent a quarter of China's economy, continued during the third quarter. Investment in new factories offset some of this weakness. Until this past summer, the government has recently become concerned about manufacturing overcapacity, price wars, and other signs of excessive competition. The state-controlled banking system has slowed the pace of new loans for manufacturing projects. Still, China's investment in exports and policies to replace imports with domestically produced goods continue to drive the economy. The country's surplus in the trade of merchandise increased 12.4% in the past 3 months compared to the same period last year. China's trade surplus, the amount by which exports excuse imports, is on track to surge well past $1 trillion this year, breaking its own record last year, while China's exports to the United States has dipped following President Trump's impositions of tariffs. Its exports of developing countries have soared. Some of the exports to other countries are then shipped to the United States, but others are being used to build factories and solar panel farms in emergency markets and to take market share away from local business. A growing number of countries, from Brazil to Turkey to Indonesia, have begun to follow the American example by imposing tariffs on imports from China. The growth data announced on Monday was slightly better than many economies had expected because the National Bureau of Statistics revised its calculation of the preceding quarter lower. The Bureau said that economic output was 1% larger in the spring than during the winter and not 1.1% larger, as it had announced in July. By a measure the Chinese government prefers to highlight, the economy was 4.8% larger in the third quarter than in the same quarter last year, the agency said on Monday. Some analysts have questioned whether Chinese data may overstate the economy's performance. The Statistics Bureau did not hold its customary news conference to discuss the data persevere because the regular scheduled release of the quarterly data coincide with the start on Monday of the annual gathering of the Chinese Communist Party Central Committee. The committee, composed of 370 of the most powerful people in China, is expected to revise and discuss the country's 5-year plan for policies on the economy and other issues from 2023 through 2030. The Central Committee is expected to approve steps in the coming months to address the country's economic weakness. Some economists expect the Chinese leadership to announce measures to help households and reinforce consumer spending, such as increasing pensions for rural seniors, who currently receive as little as $20 a month. The property slump is weighing on retail sales, but further consumption-boosting measures are in the cards, says Xu Xitao, the chief China economist at Dalit. But other economists expect China's leadership to reinforce the country's long-standing emphasis on building rail-lines, highways, bridges, hydroelectric dams, and other government-led construction projects. Many local governments cannot afford these projects because their land sales to developers, previously one of their largest sources of revenue, have withered during the real estate slump, even as their unkept costs are surging from recently built infrastructure. But China's national government has considerable capacity to finance big projects and is likely to continue doing so. Notably, in Western China, said Dan Wang, a China economist in the Singapore office of Eurasia Group, a global consulting firm. For local governments, it's all about maintenance now. The construction has been left to the central government, she said. Thanks for listening. Hoping your life fully with happiness and joys.